Hello, everyone. Welcome to Chat with Traders community presentation. Today we have our guest, Mark Bennell from Australia, making another appearance here. And his presentation today is about a roadmap to success. Welcome, Mark.
Thank you, Ian. Great to be here.
Yeah, and if any of our listeners have any questions along the way, please put it into the chat box, and we'll get to your questions possibly at the end, and maybe there might be a few spots during the presentation that Mark takes a break and can answer the questions. But generally, we will queue up the questions to be answered later. So, Mark, go ahead and take it away.
Terrific. Thank you. I might, now I've got the ability for my screen. Yeah, sorry, just bear with me. Won't be a moment, folks. Okay, so welcome everyone. Welcome to, so this is a typical traders workshop, I suppose, presentation, one that I do present on occasion that seems to be very popular. It is certainly targeted at certainly the newer trader, but also the intermediate trader will pick up some areas that perhaps were lacking in their own, perhaps lacking in their own roadmap. So without any further delay, let's begin. So of course, before we do start, just a reminder that everything is for educational purposes only, and of course you are responsible for your own trading decisions. Okay, so the topic for today is the trader's roadmap to success. Before we do start though, just some of my qualifications and why you should listen to what I have to say. So I am a certified financial technician, or the CFTe. I did the Diploma of Technical Analysis. I did the Diploma of Share Trading and Investment. I've done advanced day trading course with Darryl Morley here in Australia, and also day trading courses with several well-known US companies. I'm undertaking my Elliott Wave certification as we speak. And I've done, as a lot of you would have done, numerous short courses, books, self-directed study, including trading strategies, technical analysis, and trading psychology. Now, a lot of these, yeah, look, some good, some maybe not so good, but what I've tried to do is take away from everything something that I can utilize in my own trading and in my own education. So my goal today, of course, is going to be that if you can just take away just one thing that helps you in your trading, then I believe that it's been worthwhile. So let's start, before we do start with the roadmap, let's start though with understanding the realities in trading. So I'm just trying to sort of preface this so that we can then sort of segue into it. So most traders don't know the steps involved in trading. So when we all begin, this is where this is targeted. So most traders don't know what's involved. Most traders have unrealistic expectations as to what they can achieve. Most traders, though, have valid intentions. Most traders don't know where to start. One moment, folks. And there's generally no standard curriculum such as there would be with a university degree. And along with that, there's generally no internship. So we hear the worn out cliche that trading is a marathon and not a sprint. However, let's have a look at some of the specific figures. So the swing trader, so this is a medium-term trader, could be anywhere from 2-day hold to 2-month hold. The average time for consistency to achieve consistency is about 18 months to 3 years. So you can see that's quite a broad range there. the shorter term trader, we're talking intraday trader, we're talking market opens, the average time to consistency is 3 to 5 years. Now, even with the best coaching, the best group support, 18 months to 3 years is what I've heard tossed around in some of the bigger trading communities and bigger trading universities. So when we look at the realities of trading also, we need to think about, excuse me, think about who it is that we're up against. We're in there with our small account. Think about the bigger players and how they can manipulate and move the market. So we've got no chance against them unless we have some valid strategies. And of course, there's many traps and rabbit holes that we can fall into along the way. And simply many traders do not survive the learning curve. So let's have a look at some of these traps and the rabbit holes. So I like to call these the weapons of mass distraction. So just bear with me a moment again. So distractions and things to avoid. Now, this is important on your roadmap for the reasons that we'll get into in a moment, but one of those is subscribing to too many newsletters. So we're trying to go through the newsletters. We think that is going to get our edge, but often that will just distract us and overwhelm us. The next thing is chasing the next shiny thing or chasing too many rabbits. In other words, we're juggling too many things that we're trying to do. So that is just a distraction and something to avoid. Using YouTube as your only source of education. Looking at Twitter and other social media constantly. Strategy jumping without proper testing to validate. So this is one thing to avoid. And going along with the crowd. So don't be like the herd just because it works for somebody else. It may not even be working for somebody else. But don't be like the crowd, because what resonates with them may not resonate with you. So begin to trust your own judgment as you develop your understanding of market behavior. Let's just quickly look at the holy grail in trading. So really, there are no shortcuts. There's no secret sauce. There's no quick fix in trading. There's nothing new in trading. We're not going to discover something for the first time. And it won't be found in some indicator or combination of indicators. And it won't be found in some new strategy discovery. It won't be found on the internet or solely on the internet. And pursuing the holy grail only leads to frustration. So the holy grail in trading is within you. It is the application of a winning methodology applied with consistent discipline. So let's have a look at the 4 stages of a trader. So the very first stage is unconscious incompetence. The second stage is conscious incompetence. The intermediate stage in between, let's call this 2A, is the light bulb or aha moment. The third stage is conscious competence. And the fourth stage is unconscious competence. So let's break each of these down. But the key to it is knowing which stage that you're in. So I think when you go through this, you'll have a better understanding of which stage you're actually in. So let's have a look at the first one. So unconscious incompetence. So this is the stage where the trader knows nothing and doesn't know that he doesn't know anything. So he's very much fooled. So the trader thinks, well, how hard could this be? Trader acts on impulse and loses money. The trader may have some initial success. Let's call that beginner's luck. And the trader doesn't see the need for education. Now, this beginner's luck that we spoke about before too, when there's that initial success, this is often due to the fact that one tends to trade better when they're not afraid. So this is a valid phenomenon, but it tends to be short-lived. So the trader in this initial stage, he doesn't see the need for education as well. The second stage is conscious incompetence. So this is where the trader realizes that they are incompetent. The trader knows they're missing pieces of the puzzle, but doesn't know where to look. This usually comes after some costly mistakes and quite a bit of frustration. So this is where a lot of the traders will stay unless they're humble enough to admit this to themselves. Otherwise, they generally will stagnate. So the trader tries different types of systems, indicators and the like, looking for the holy grail. Trader will also create unnecessary complexity without a real working trading plan. They think they're working on adding moving parts to their trading, but they're actually taking away from it. So this phase can last 1 to 3 years. So desperation can set in, which results in risky decisions. In other words, the trader is desperate to make a go of it. So the remaining traders may in time be able to move now to the next phase. And otherwise, most traders really, they give up at this point. So 1 to 3 years. So let's have a look at the light bulb moment. Let's call that 2A or 2.5. So this is where the trader realizes it's not the system that will make the difference. So the trader's at this point, he's moved to a point where he can actually truly move forward. He realizes it's not the system. So new truths have been established within about the market and himself. Distractions and noise are minimized or ceased. Traders now able to realize that he doesn't need that. Proper focus is applied to one method. So plus his risk management. So his thinking now changes to a series of trades perspective. In other words, the result of one trade doesn't matter. And he realizes it's all about a disciplined application of his edge, his or her edge. So there's no more getting angry at a single trade. He's working on that single trades perspective. So the next stage now is conscious competence. Now the trader here is taking trades as a methodology dictates. He or she is working hard to find and take the best trades, managing trades properly, diligent in their processes, their journaling, etc., and they're trusting their edge. And they're now beginning to make consistent profits. So the fourth and final stage is the unconscious competence. So the trader has simplified a method that truly suits their personality and that resonates with them. Trading is easy, almost boring at times. Emotions have been mastered, not eliminated. Increasing consistent profits are now a reality. The trader is humble and respectful to the market. So the trader now has learned so much about themselves and the market. The trader also has gratitude for the opportunity and savors the journey. So this is the 4 stages of the trader, and you can apply that to anything worthwhile in life as well. So before we move on to how we get started, I might just open it up if there's any quick questions. I don't see any in the chat. Any questions from you, Ian?
No, none so far.
Okay, so that's all well and good. So how do I actually get started? What is this roadmap? So one of the very first points that I make and that I teach is to start to treat trading like a business. So it's important that all trading functions are conducted in a business-like manner. Just as any decent business conducts itself in this way, so should the trader. So any good business has a business plan. So the very basis of any business should be that it operates according to a well thought out business plan. So this plan helps clarify thinking. It provides a dynamic blueprint and a structure for how the business will be run, as well as describing future plans and goals for the business. Generally, a bank or a financial institution will not provide a business loan unless the business can produce a plan that helps see the big picture and demonstrates guidelines, to drive activity. So the second thing should be a SWOT analysis. So a SWOT analysis, which is a strengths, analysing your strengths, weaknesses, the opportunities, and also the threats. You should conduct one of these analyses on the business, the trading business, but also yourself as the main employee of the business. In other words, what are your strengths and weaknesses, and how will you bring those to the trading business? So in other words, look at the strengths and weaknesses of your personality. So a business should have a clear vision as well. We should be able to identify what the tools of this business are. We should have operating procedures. We should have some contingency plan, should things not go according to how we expect. And there should be accountability and reviews. So like any good business, how will the employees be accountable, and what is the review process? And question that I often, or a statement that I often make, is that if you did a review on yourself after, say, your first month, would you be eligible to keep your job? So think of it that way. So when you operate as a business, operate like an employee, and you're accountable to that business, should you sit down, and when you sit down and review yourself, would you still keep your job? So when trading is conducted in a business-like manner, the chances of success are greatly improved. So let's have a look at some preliminary education and understanding of the markets. So one of the biggest sources of failure in trading is a lack of education. When you do seek out education, though, be very selective with what you study. And if you can, seek out quality education. And there's an old saying, you pay for what you get. So begin to master the basics in trading. Continue to develop your chart reading skills. Begin to look at charts in sim or demo. So what we're doing is we're now starting to see it at the hard right edge of the screen, and start applying your knowledge as in the internship. Now, let's just back up a little bit here and just think of the analogy of the medical student or the doctor or the engineer. I studied engineering. So there was a standard curriculum, there was a roadmap that we went through, and we worked our way through it. Once we'd worked our way through it, we were mastering the basics as we went along. We were applying our knowledge. So it should be with trading. Everybody wants to just jump in and start to trade, but you'll see as we get through here that actually placing that trade is one of the very last things that we do. So continuing our trading education. So begin to gain a feel for price movement. Begin to identify what is resonating. Now, this is one of the keys. So when I say what's resonating, we're talking market structure. We're also talking, so market structure, trend, how does trend, weakening trend, strengthening trend, accelerating trend, how does price behave at certain areas? And also too, what setups are resonating with you. So this is one of the keys to it, because if you're trying to find setups that aren't actually naturally resonating with you, you'll actually just find that it's hard work. You won't be able to see it in real time. Whereas what is already naturally resonating with you, your mind will start to recognize that a whole lot quicker, because trading in the beginning, trading is all about pattern recognition, picking up patterns in market structure, and also picking up patterns in terms of market, in terms of setups. So start to document what is resonating. So you might have certain analysis techniques that you like, document those in checklist form. So start to create some journals. You might have a market structure journal. Start to create your playbooks of your setups, which is the different variants of your setup. Start to create some checklists of what you do when you look for your setup. And also start to create some processes and rules that make sense to you. Now there's a question here that I'll just address from Patrick. So Patrick says, so I've said something about the average time to consistency at the beginning. where does the data come from? So the data, that's data that I've seen, just general data from sort of trading companies, but also what I've found training students as well. So what was the average trading account for this data? So look, the average trading account could be anything depending on individuals' financial circumstance. And was this people trading stocks, options, futures, coins? Now, when we talk about swing trading, we can be talking generally about equities, stocks, Forex, probably futures. Futures you may be able to, maybe options. So swing trading is breaking it up into that time frame. So the education background from these people generally, when we say education, are you talking sort of educated out in the real world, as in so when was this measuring in the bear market or the bull market? So if we're talking 1 to 3 years, generally we'll be over a certain period. A good question, because when I get students to test their setups, we want to be able to test. Now I'll just draw this, see if I can draw this on the screen. That is a good question. When I do test, I get them to test over a period of accumulation, a markup phase, distribution, and down again, because otherwise if we do test and your data's taken off a period here, we're not going to get a good sample, are we? Good sample of trades. Now, those of you may remember from my last presentation with my trading journey, yes, this is the area that I was trading in for 3 years. So that gave me a real false sense of what the markets were about. So no, now, certainly when I have teach students, I make them back test through all of these periods so that we know what to do in the periods when it's less conducive. So I hope that helps, Patrick. There's a question from Tiffany too. So what stage are the traders in when they seek out a coach like yourself? Generally, it will be in that when they hit that aha moment, when they realise that there's more to it, Tiffany, and they realise then that they want to shortcut the journey. So I have a point on that as well shortly. All right, so we'll continue on. So great questions though. But in general, Tiffany, it's when they realise that, look, they need help. And to be perfectly honest, that is the best time when I work with people. I don't take people from zero. When I say it's too hard, generally they will start and then they realise the work that's involved, and ultimately most of them give up. But once people have done at least 18 months to 2 years and they realise now that there's more to it, I know they're serious. They've usually blown a couple of accounts. They've tried a few different things, and now they just need that clarification and they just need that boost. All right, so let's continue with our trading education. So begin to understand good money management. Recognize the importance of trading psychology. Now, I'm going to touch on that a little bit down the track. Remember the analogy that we spoke about before, the doctor or the engineer. Work through at certain stages. And even when we go into that internship, at no stage are they left to operate on their own. So it should be with trading. We're not going to attend a weekend seminar and think that we're going to jump into the market and absolutely nail it. We've got to be realistic in what it takes. And I find that is one of the, and look, we all go through it. I was the same. So note though, at this stage, not one trade has been placed. So continuing our trading education. So this is the key to it, folks. So prove up your edge. How do we do that? We backtest our strategy. Now, we're not talking just backtest it over maybe 10 or 15 trades. We're talking about backtesting it over a great sample of trades. when I teach students, let's say it's a FX, for example, we want to test it over 3 to 5 different markets. One of those could be gold, let's say. But we want 3 to 5 markets that they can begin to trade with. So we want to prove up what they're seeing on those particular markets. So how do we do that? We back test through it. Now, the better your statistics can be in this time as well, the better your understanding of what is resonating and the better your edge will be. So if you can, let's say, for example, a pullback, and you know your best pullbacks are with trend, then when you go to live trade, you'll know that these are your high probability trades. Whereas if you're just trading every pullback, you don't know. Some of those could be trading against, some of those could be counter trend, and they could be not profitable. So you need to be able to prove up your edge. And the only way to do that is to back test. Now, as you're back testing as well, if you have certain favorite markets, well, you will now start to get a character for that particular market, which is all important as well. So while you're back testing as well, continue defining your edge. So we spoke before about defining your setup and your playbook of that one setup or 1 or 2 setups. So continue to refine. Now, when we say edge, we're talking about your entry setups, but also your edge is also your trade management as well. So not only are we looking for setups, but we want to be able to manage that trade properly. So it's all encompassing. So part of your methodology is, yes, how do you manage that trade? So continue defining your edge. So once you believe you've proven this up, and what this does here by back testing, we gain confidence in our setup, which then leads to competence in what we're seeing. So if you can't prove up your edge in a back testing phase, then you shouldn't be going live. Okay. So that's one of the keys. Your psychology could be spot on, and I could teach the psych routines. But if you haven't proven up your edge, you're just going to be in control as you're losing money. So proving it up is absolutely important. Now, I did it the opposite way around. I did a little bit of back testing and I then forward tested, but it took me about 2 to 3 years to finally gain confidence in what I was seeing and my methodology. So start trading your edge in demo or sim. Now, you've got to realize here that in these phases here, there's no psychological impact. There's very little psychological impact. There will be a little bit because things will start to trigger, but when there's no money on the line, there's no major triggering of your psychology. So you can see here we've done the back testing, then we go into demo or to sim. So you're trading your edge. So now we're actually trading at real time, whereas in back testing, we can just quickly flick through bars and just get to the point we want. Now, when we're trading in simulation, now we're having to wait, or in demo, in live trading in demo, we're having to wait and we're having to develop that patience. When you do start trading in live environment, in simulation, so begin to apply your sound money management. Now, money management is not difficult. It's probably one of the easier parts of trading, so some might disagree, but apply that sound money management and trade according to your rules. So those rules that you've documented before. Start journal or continue to journal your activities. This is one of the keys as well. When you can journal your thoughts and your trading activities, you've now got the basis where you can start to learn. So prove that you can trade your edge in real time. All right? There's no money on the line yet, but we need to prove we can trade it in real time. So the only way to progress is to learn from our mistakes at this stage and continue the cycle of trade, review the trades, review our journals, and create some steps for improvement. So continuing our trading education again. So once we're profitable and consistent in demo, you need to start now trading live with a very small size. Why do I say this? Because at this point in time, not really interested in how much you can make, more interested in can you follow your processes. And what we want to do at this early stage is we want to not be inducing huge psychological emotions by trading with large size. This is the point where you're starting to work with your psychology, to recognize areas of your psychology that need work. The last thing we need to do is have that overactive because the large size that we're trading. When I work with traders, I'm not interested in how much they're making. And usually, they'll be trading, with the absolute smallest size, might be 1 or 2 or 10 shares. In FX, it could be down as low as 0.03, so that they can scale out. But I'm not interested in the money. I'm interested in how well they've executed their processes. So that allows you, it's giving you a base to move from as well. So we've got to trade according to our methodology. We've put our methodology together. We've put our rules in place. We've got our checklists in place. We're crazy if we don't start trading according to our methodology. We're continuing to journal our trading activities. We're now live. So we're journaling from our point of view now of also how we're feeling. We're taking our psychological temperature a lot of the time. So we're also starting to work on, I just touched on that, didn't I? Starting to work on and journaling our psychology. So now that we've got skin in the game, now that there's real money in the markets, now our psychology is going to be triggered. So now we need to start working on and journaling our thoughts. So think about what you're thinking about. So we need to prove that you can trade your edge live consistently. I'm just going to, so once you can prove that you trade your edge live consistency, start sizing up, okay? So there will be that period also when you do, once you've traded, I just want to make mention of this. So once you've back tested and you've come up with a beautiful back test, when you do go live, there will also be this discovery period where you're no longer discovering about your setup, but you're discovering about yourself. So there will be this period. All right. So that period, that length of time is different for everybody, but don't think just because you've produced a beautiful back test, don't think that that will translate straight away into, some people do. I've had a couple of students that have, where they've come out and they've been able to trade relatively similar to their back test, but I do take 30% off the back tested figures to see whether it's worthwhile or not. If we get that in their live situation, then it's probably as good as we're going to get. But generally, there is that discovery period, and then it starts to come together. So we might just pause here, and I'll just answer a couple of questions. So Tess has made a comment here that says, some people don't see the benefit of paper trading or demo. Yes, and I was one of those two, Tessa, absolutely, because I didn't know back in the beginning either. So a lot of us just jump in live. So what's happening when we just jump in live and start trading? We're dealing with everything at the same time. We're trying to prove up our edge. We're trying to create our methodology, and we've got all of these emotions going on as well.
Well, I brought that up because, I mean, for me, when I was just starting out trading, I thought it worked out for me to just started trading live with just a small amount of money. And, part of that was impatience, but part of it too is I just wanted to feel like everything, the emotions and all that. Because I thought of that money that I put in was kind of like tuition, just, just go for it. And to learn that way. And, I think either way can work. That's just what I'm, that's how I learned.
That's how I learned as well. And look, you can do it that way. And yes, I did it. The trouble was that I was then having to work my way through the things that I should have worked on before I actually started trading live. So you can do it and you can push through it, absolutely. But yes, when I work with students, we master each step at a time, so that when they do go live, they've dealt with, they've got their checklists in place, they've been working on their market structure, they've back tested, they've gotten all that out the way, and now the key to it, Tessa, is that they've got confidence in what they're doing, confidence in their setups. Whereas when we jump in live, and you would relate to this as well, we're trading a certain setup, but we're really not sure whether that's profitable or not. So the only way we find out is to go through 20, 30 trade samples with discipline to realize that, no, this is not working for me. So yes, it can. And as you said before, yes, absolutely. Put some money in, consider it as, the cost of education. I've had some people that have, their cost of education has been hundreds of thousands. So you can actually avoid that by doing it the methodical way. So, but anyway, look, everybody is different. Some people can do it, but yes, it took me probably 2.5 times as long. So Ian said, how long is an adequate forward testing period? Bull markets can last a long time. Yes, absolutely. So that was my initial story, where I traded for 3 years in a bull market here in Australia, where our resources were just in such demand that I could have just thrown a handful of darts at a basket of stocks and made money. And that's what happened. So that set me up for failure, because I hadn't experienced a bear market, and I went and started to trade full time, and not long after the GFC hit. So I just wasn't prepared for that. So if you can trade markets that we're getting now, a bit more regular in terms of 1 to 2 years, and then 6 months of correctives. So you need to go through that, especially if you're a swing trader, to know the times when you need to be out of the market. So sitting on the fence or being out of the market is also a position. Okay, so I might move on now. All right, so just quickly just some quick pointers about learning about yourself. We touched on before trading psychology and the importance of it. So here's just a couple of quick tips about learning about yourself. So trading is very much about know thyself. We've heard that many times, but how do we know thyself? The very first thing that we need to do is examine our beliefs. So one such belief, an example of that is, do you believe you can be successful in trading? And our beliefs drive everything that we do. If you don't believe you're going to be successful in trading, you will just simply sabotage your efforts. So you have to believe that you can be successful. So it's worth examining, what are your beliefs. If you believe that trading is too hard and that not many people make it, that's automatically going to sabotage your efforts as well. You must examine your money scripts. So let's have a look at some of the types of money scripts, or just an example of it. So there could be that money avoidance, where people believe that people with money are, or that rich people are greedy and not nice people. So naturally, you're going to avoid getting into that category. There's money worship, there's money status, money vigilance. There are a couple of types of money scripts. So you need to examine your beliefs around money. Okay. So when you're learning about yourself, and when you do start to go live, those fears that you're encountering during the backtesting phase, those minor fears, now that you're in a live environment, those fears are going to absolutely confront, and they're going to stalk you. Okay, so this is where we spoke before about the psych journaling. You need to confront these. You need to identify them for starters and confront them. Now, generally, there is, in terms of psych root causes, there's generally only 3 or 4. Everything else manifests out of that. So you need to be able to identify that as well. So when you learn about yourself, it may at times also be painful to deal with. You need to be prepared for that. So, and you might need to maybe seek some professional help with that. So the key to it, though, is you've got to be able to create some strategies now to deal with these emotions. So unless work is done in this area, stagnation will occur. And we often hear that, the trader is, he makes the same mistake over and over again. He's done it again. All right. So unless they're working on and creating new habits, or, in NLP, creating those new neural pathways, we will keep doing the same thing over. And ultimately that leads to stagnation. So trading is very much a journey of self-discovery and personal growth. We can't control the market, but we can control our reactions to it. You hear the worn-out cliche, you've got to trade like a robot, you've got to trade mechanically. Well, that's just impossible. We're human, we've got human emotions. The secret to is working with those. And we spoke once before or last time about these if-then statements. If the market does this, then I do this. Well, the same thing when you get to working on your psychology. If I think like this, if this thought's cropped up, then I do that. So if you can apply those same, obviously it's a lot more involved than that, but if you can use that as an overall sort of overall sort of framework or overall guide, then that will certainly help. So, we might just pause there too, see if there's any questions. So, Nicholas, what is a strategy you use or teach to deal with emotional barriers? So, what we do, Nicholas, is number one, we identify what it is. We identify when it's occurring. We identify the immediate action that needs to be done, and then we overlay the negatives about that. And then we start to overlay some positives about that. So what we're kind of using that sandwich approach, I guess. So, but the key to it is to identify what it is and when it's occurring. To give you an example, hesitation. So when does this occur? Is it right before the start of, when you're looking through, looking for setups, you see one setting up, what's the root cause of this? The root cause of it is going to be fear. Okay, so hesitation comes out of fear. So what's the immediate response to that? Well, the immediate response should be, we need to basically reset. In other words, we need to just, calm our emotion down. We need to recognize, for starters, when it's occurring, which you will, because you'll feel that hesitation. And immediate response is going to be reset, get ourselves back into a calm state, and then overlay, well, what happens when I do hesitate? What are the things that occur? So in other words, we're kind of partially beating ourselves up. When we do hesitate, we see the trade go and works out to be a great winner. We need to remind ourselves of that, not to put ourselves down all the time, but just, I find that works as a good way to call back those times when you've missed the trade and it's actually worked really well and it was all according to your setup. But also too, then overlay the times when you have actually jumped in. Now this is touching on visualizations and affirmations. Remind yourself of the times when you did confront that and you jumped in anyway, you took the courage. Remind yourself of how you felt disciplined. You felt that you had achieved something in terms of overcoming that particular problem. And when you can use those, and you can use those consistently over 30 to 60 days, you'll find that habit kind of just, that never disappears, but is very much minimized. Good question, Nicholas.
Mark, question about regarding people's fears. Some traders argue that the best solution to this is just simply reduce the position size, just enough to get your feet wet, but not enough to trigger any major fears. And so the trader can feel more confident about jumping in and then feeling those fears.
Certainly. So the very first thing is we're in trading to basically, let's face it, to make money. So you'll find that traders, when they're talking position size, so this is position size here. This is obviously time. So when we increase the position size, now let's imagine this is the equity curve in between. You'll find the position size as you increase, yep, can be good. And I do say that you've got to always push that boundary to know where is your tolerance. So you might find that your tolerance at this size stays there for quite a while. Now, obviously, it's got to be over a series of trades, not one or two. But then you'll find you might be able to push through. You've got to be able to find what is that threshold. Because otherwise, what's the point of doing it? Right? We're in, let's face it, trading should not be comfortable. Okay, so every trade you put on, there should be that little bit of discomfort. That's the way it is. That's why we're in it. We're putting skin in the game, but not that much that takes us out. But you might find that traders then get to a point where they're kind of satisfied, and they'll stay at that sort of they'll stay at that level. They're happy with that, whatever that may be. That might be 5 times what they. What their reasonable amount. We're not talking back in this proving it up phase. And I also say that when you go live, if you've managed to if you've managed to create a small profit in your first year trading, you've done well. Okay, a lot of people will just stagnate, and then it finally all comes together. That period is different with everybody. I've had some that's taken 3 months, and this is when they're live, some that have taken 8 months, and some that just can't get past it. They just can't apply the routines properly. But there'll be that period. But you need to push the envelope until you reach a point where you're sort of satisfied with that. When you go too big too quick, you'll find that your normal equity curve, and this is how you know when you're straying, if you've gone too big and you find your equity curve is a little choppier, than normal, you'll find that it's probably, it's maybe a little too much too quick. It's got to gradually just increase. Does that answer the question for you?
Yeah, we have another couple questions. A question from Tiffany.
So Tiffany says, in your experience, how common is a fear of success as opposed to failure? Yeah, great question. So look, generally, when kind of people seek me out, Tiffany, they've had success in other areas, and they've been at it long enough that they've realized that, probably that doesn't exist. But look, it's there. It comes back to that sort of self-sabotage, doesn't it? Where, maybe that is money scripts, or maybe it is, people they've witnessed other people in success in other areas, not necessarily monetary success, but other areas. So no, it's not actually that common. Generally, when people seek me out, they've kind of either moved past that or that doesn't exist, because otherwise they wouldn't keep at it for a couple of years. And when we say a couple of years, we're talking minimum sort of 10, 15 hours worth of work a week. So we might move on, folks. They're great questions, absolutely. So in terms of how to get started, seek out expertise if required. So this is where we spoke before about a mentor. So if you're having trouble bringing it all together, engage with a mentor if required, and one that has a style that resonates with your own. This is critical. All right. So you want to be able to see that that mentor in action to know whether, yes, I want to emulate that mentor. The people that seek me out are the ones that think like me. I know that's kind of could be a bit scary at times, but I know the problems that they're going to come across because I've come across with it. I come across those problems as well. But also the ones that seek me out, my style is resonating with them. So generally it's going to be the setups, the techniques that will be common to all of us. And usually it's that, accounting, engineering mind. So a style that resonates with you. You want to be able to feel comfortable with your mentor as well, but expect to do the hard work and plenty of it. Okay. So generally 60 minutes that we spend together results in about 12 to 15 hours of homework for the individual. I'm not the one doing the work, of course. I'm directing the learning, but expect to significantly fast track your learning. So what we will do too, we've got a couple of minutes. We'll just quickly go through the transitioning phase and you'll see how the thinking changes with the trader. So this is how the transitioning phase usually works. So the trader is simulated or demo trading. He's losing consistently. He begins to break even. So this is after he's done his training, of course, and he's proven up his edge. He starts making small profits. He's starting to increase the profits, and then he transitions to live trading. So once the trader is live trading, now don't forget he's proving himself up in simulation. So even when he's live trading, this is what we spoke about before, he loses consistently, but he begins to break even because he's continuing to now not work on his strategy, work on the things that are tripping him up, which is his psychology. He starts making small profits, and then he starts increasing the profits. So let's have a look at some of the stages of motivation with the trader. So the beginner, so he loses $100, gets angry and emotional. His primary focus is on how much money is made or lost. So the novice trader, he makes a 1.7R winning trade. Already we can see his focus is moving away from monetary to reward to risk. His monetary thinking is no longer the primary focus. The advanced trader, win or lose, unemotional response. Individual results are not that important. He believes in being in it for the long haul. The professional trader, content with daily decisions. His thought process now is key. Remember we said before, monetary, money doesn't matter. The only thing that we're interested in is, have I followed my processes? Decision-making is now a key focus. All right, so see where now, basically our psychology is the first and foremost in our thinking. Individual results have no relevance. And he or she has performance-oriented goals. Let's have a look at what makes an expert trader. So according to research, the three factors that distinguish high-level performance across the various fields studied. So we have to have a strong interest and emotional commitment to a particular field. If you're in trading to buy the next latest Mercedes or whatever, you will not have that staying power. You must have the desire to reach a high level of attainment in that field. So you must have a desire not to be just a trader, but an excellent trader. And you must be willing to put in significant time and effort required for this high level of achievement. So trading mastery requires great amount of time and effort. The individual must cultivate a long-term relationship with trading without getting too skewed. The individual must bond emotionally, especially in the initial stages. Strong bond is required to survive the frustrations and many learning curves. So mastery is achieved by working hard in a field that captures an individual's talents, interests, and imagination, and thus finds a great niche. So you can replace, trader here with anything expert. Let's have a look at the quick look at the iceberg illusion. So people only see what's at the top here. But there's a lot of disappointment down the bottom, sacrifice, failure, but now we're creating good habits. We're working hard. We're dedicated. We're persistent. But people don't see this. They only see this. So in summary, what have we learned? So we've understood the realities of trading. We started out on our trading education. We're now treating trading as a serious business. We're applying our knowledge. We're proving up and defining our edge in a simulated environment. We've started to trade live. We've been journaling, reviewing, and improving all the time. We've engaged a mentor if required. And most of all, we've enjoyed the journey and we're able to look back with gratitude. And you could add in there, we've started to work on our psychology. You got to remember too, psychology is 80% of your success. So before we do move on, there's a question here from Graham. Graham says, for the traders that push through that initial tough first 3-year period, do most of these traders initially succeed, or is there still a large proportion that never makes it? Yeah, Graham, yes, there's never any guarantees. A lot of times, traders will get through that 3-year period. Maybe they're struggling to ramp their size up a little bit. Some may see that perhaps, the time investment is not enough. And not everybody makes it. Definitely not. You got to remember that out of those that try, 95% fail. The rest, a lot of those will just be on break even. But I think the advantage of it is, Graham, when you do it the proper way, you've got the best chance of success. So Patrick says, what is your eyes for a new trader? The first thing to learn mentality, risk management, technical aspects, or something complete others. So the trader should be, while he's in that learning phase, he should be working on developing his chart reading skills, Patrick. Thanks, Tessa. He should be working on being able to read a chart properly. If you can't read a chart properly, there's no point sort of going further. That doesn't mean you need years of formal trading education like I've done. Yes, that helps, absolutely does, but you don't need to know that. You just need to be able to read a chart properly. So, but I always say, start thinking about and studying your psychology early. Start reading books like Trading in the Zone early. May not make sense straight away, but as you start to experience those emotions, you'll be able to recall what you've spoken about. So some people say, learn about your psychology first. I believe learn about your psychology as well, but until you're experiencing it, you won't realize the full benefit of it. So start to be able to read a chart properly, start to learn about your psychology and risk management as well. Now, I'll just go back to that question before Brian's.
We had a question from Mark. When your equity curve starts to flatline or go downward, how long do you give it before changing strategy?
Yes, great question. So, Mark, if you've back-tested your strategy properly, you'll know when there's going to be periods when it's basically either going to go sideways or it'll come down. So if you've back-tested your setup, let's say we're talking about the euro dollar, you've got a pullback strategy on a 60-minute chart or a 4-hour chart, you'll know that there's going to be periods where there may not be a trade for, say, a week and a half. So number one, we know the frequency by our back testing, but also two, you will know when, provided you're following your checklist and following your setup properly, you'll know there's times also where you're just not, you just won't be on the right side of probability. Now, so that'll equate to your drawdown. So your drawdown might be 3 to 4 losing trades in a row. So you've already got that figure in mind. Now let's add another one bad trade within that period when you do go live. So we'll know that our drawdown is probably going to be, say, 5 trades. So provided you're in that and you go back and you review your trades and you look at it and you say, I would take that trade every day. You know that you're following your plan and you're just either maybe slightly out of sync with the market or the market is not conducive. In other words, you're just on the wrong side of probability. So when you do your trade reviews, it's either, follow the plan and I would take that trade again, and it's been a winning trade, followed my plan, would take that trade again, just didn't work for whatever reason. There could be news behind the scenes you didn't know. It's turned into a losing trade, provided you've managed it properly. You're just not on the right side of probability. So your statistics will help you to fall back to know, yes, this is still in line with statistical, drawdown period. But if it extends, then you might need to ask yourself, yes, was there something in that period that I'm not doing right? And generally, it will either come back to maybe something in your psychology, but if you go back and you know that 3 out of that 6 trades you probably wouldn't take again, you know that it's nothing wrong with your strategy. So too many people throw the strategy out too early without giving it a good opportunity. But this is the key of the back testing, Mark. You'll now know that, okay, the euro dollar, I know I'm going to take 4 to 5 losing trades. If you've back tested 5 pairs, you'll know that over all of those, there's going to be there could be a period in there where 2 of them hit, maybe drawdown, you'll maybe take, 6 or 7 losing trades in a row. So if you combine their equity curves, it'll give you an understanding of what that drawdown period is going to be and what the duration is. So falling back on your statistics is all important, Mark.
I have a follow-up question for Mark.
So from Graham. All right, so let's go back to that. Quite a few slides up, I think, Graham. Well, yeah, we'll have a look at it quickly. So there's a roadmap it's a huge topic, and I've tried to squeeze it into our hour together. So I hope that you are able to take something away from it. Okay, so the unconscious competence. Yep, good. So this is the last phase. Right? In other words, what's an example that the trader just doesn't? He sees the setup. He knows intuitively that this is a setup I take every day. You get to the stage where you don't. Once you put your method, when you've got your methodology in place, the idea is to just make that as simple as possible without taking away from it. But once you've internalized that, Graham, you don't need to then go back and look at it every time. I mean, I've got, all of my checklists that I've created, but most of the time I don't even need to look at them. So that's where you see a setup and bang, you know straight off, this is one of those high probability setups. And Nicholas would be probably able to relate to this as well. You see something setting up, you're almost getting excited because this is one of those high probability. That's unconscious competence, okay? And you're seeing something setting up, you're feeling your emotions rising up, but you're able to just push those down or just keep those, at ease. You're experiencing it, you're going through it, but you're pushing through anyway. So there's a process example, and there's a yes, Mark. So Mark says you compare your live results to your back tested results over bull and bear markets. Yes, when you've got that fallback, when you've got those statistics there, it makes a huge, that's what gives you confidence to know that, yes, I'm just in a phase where, the market is not conducive. And when you do back test, Mark, you'll know this is a phase where you're probably in a ranging period where you've stayed out of the market for a month. You'll see that same phase in real time. So you'll recognize again, it's all about pattern recognition. Yes, I've seen this before. So I can't understate the importance of chart time. Okay. All right, so just to complete. All right, so what many people ask, well, what is my style? I have a strong bias to what the charts are telling me. I'm a qualified technical analyst, so I fall back on that. I don't let news spook me. Am I interested in news? Yes, but I'm interested in what the charts are telling me. I'm interested in, what's occurring on the tape. So very much a big picture analysis and then drilling down as required. So my style is I swing trade using weekly and daily analysis charts, and I'll enter using a daily and under, so a preference for with trend. But I'm also an intraday short-term trader or scalper using higher time frame market structure on 60, 30-minute charts. Context and the setups are identified on 5 or 3 minute, and the entries are fine-tuned on 1 minute chart. Now that relates also to market opens here in Australia. I'm in Australia. So I trade anything with a catalyst, anything with momentum. I'll trade for the first hour, hour and a half, and then I'm pretty much done by lunchtime. But then I will, if I've got time and focus, I will scalp, FX after my dinner, which is London Open. So if you'd like to know more about me, this is my company that I've set up just for the mentoring side. It's Integrity Trading. You can find it there at integritytrading.com.au or info@integritytrading.com.au. So I offered structured mentoring where we work through that roadmap. And if anyone wants to see the roadmap in detail, I'm happy to show you that. But I also do one-off mentoring where traders have got their setup, they know their setup, they've back tested it, they're just struggling to bring it together. So I do one-off mentoring, and I do coaching and accountability where I'm basically holding your hand. Thank you, Tessa. And I also do workshops as well. Not a lot. It's not my main thrust. It's not what I do. I'm a trader first and foremost. But, I do enjoy helping others on their trading journey as well. It gives me a real lift to see traders that have been trying to trade for 6 or 8 years and then bring it together. But when I do work with students, when we do a structured mentoring, it's anywhere from 9 to 12 months to work through the program. So there we go. I'll leave that up.
We had a question from Nicholas, whether
Yes.
you'd be willing to share an example of a trade from your personal playbook within the community. It's a concept that's always preached, but you can't Google playbook format
That's right.
and get a good result. So I'm always curious to see the details of others put into studying repetitious patterns.
Absolutely. Absolutely. So when I do workshops, I'm doing one tonight for an FX company, and I open up my playbook, Nicholas, of one setup. So we look at the specifics, we look at the criteria around that, and what makes that an A, an A plus. I know where you're coming from as well, and then we go and look at each example, and we'll look at probably 12 or 15 examples of that particular setup, but more importantly, the context in which that setup appears. Because as you know, anybody can teach, look, here's a pullback, a single leg pullback. This is where we enter. But okay, what's the context is where this is appearing? Is it after a reversal? Is it breakout of a consolidation? Is it a with trend trade? Graham. So the company that I stream, I did stream for an hour every day for a UK company a couple of years ago. I left that last year, but another one approached me, and I do about 4 hours a week for them, and that is analysis of the FX market. So I do a half an hour a day. But Wednesdays I do a workshop, so I only do 4 hours a week. Can I mention who that is, Ian, or would you like me to send?
Yeah, certainly. Go ahead and share.
Okay, so it's a little startup company. They approached me when they knew that I'd left the previous one, and it is fxftraders.com. There's a free trial there. You can come and see what I do there. I just go through half an hour. We just quickly go through. I do the S&P 500 and the Dow and the NASDAQ and the VIX as a macro overlay. So what we're looking for is swing trades that are, based off a weekly, daily, and drilling down a 4-hour and a 60-minute chart. So I go through, analyze those. I produce a watch list, and then people will trade off those, identify what we're looking at, call certain trades at certain times. Even last night, we looked at the little pop on pound dollar, and we got the little, we faded the spike and got the reversal down. Not all the time, but most of the people in there are students. It's an odd time slot as well. Most people watch it on replay, but yeah, it's a company that is just starting up. So we're not getting a huge amount of views, but I do it. But it's more. This is a little bit more advanced as well, where I'm able. A lot of the people in there are actually my students, and they just want to continue that daily learning. Where I'm now able to share a little bit more advanced sort of techniques, rather than a bit more structured towards the newer traders. So anyway, have a look. But I enjoy it. I do my own. It's what I would be doing myself, Graham, for swing trading, FX swing trading. So I identify, risk on, risk off mode. I don't look at too many market internals while I'm doing the stream. We just look at the basics, and that is usually enough. And but to see the way I go through it and analyze, and it's not overarching. I don't use a huge amount of advanced techniques, but yeah, check it out and see what you think. Let me know. Identify yourself. They're still working on the website as well, so the chat there is a bit slow. But no, it's good. I enjoy it. I do enjoy it. So there we go.
Great.
Right,
thank you, Mark.
No more questions. We might leave it there. So thank you, everyone, for your company and your attention. And look, I hope that I know that there was a lot to get through there. But I hope that even if there's one thing that you've taken away, I hope that helps your trading. Then I consider that it's been worthwhile. And yes, of course, you can hit me up on the community. So appreciate the opportunity again, chat with traders, and look forward to the next one.